This is Fintech Insider News. This week, can anyone actually stop Revolut as it lands a French banking license? Can Countingup and Griffin make running a small business less painful? And can the FCA help Teya and other UK fintechs scale into global success stories? We'll be tackling all of this and more on today's news show, so please don't go anywhere.
This episode is brought to you by Facebook. So you were scrolling on Marketplace, and there it was, the bike you'd been searching for. You sent a message, and it turned out the seller was super chatty, kind of funny, and an avid cyclist. The next thing you know, you're in a cycling crew. Well, a community cycling group. The thing about Facebook, you might find more than what you're looking for. From a browse to a bike ride, this summer find more on Facebook.
Hello and welcome to episode 1090 of Fintech Insider News, brought to you by 11FS, the six-time consultancy of the year that works with financial providers, both big and small, to build the next generation of financial services. I'm Ross Gallagher, the head of consulting here at 11FS. Now, to help me unpack the biggest and most interesting stories from fintech and financial services from the past week, I'm joined by a quite brilliant panel of guests. First up, we have Phoebe Wallis, the Chief Revenue Officer at Griffin. Phoebe, it's really lovely to have you. I know you've got some exciting news that we'll get to shortly, but I don't know, do you want to start maybe just by introducing yourself to our listeners and maybe telling us a little bit more about Griffin as well?
Sure. Thank you for having me. As you've just kindly said, I'm Phoebe. I'm Griffin's Chief Revenue Officer. We're a UK-only API-first bank, and we provide fintechs and then anyone else the infrastructure and the license to offer financial services products, which is what a bulk of today is about. We're big believers in contextual finance and supporting firms bring real value to market with financial services products that consumers and businesses alike really want and need.
Amazing. Thanks, Phoebe. It's lovely to have you. Next up, we have a very warm welcome back to the show for Veronica Glab, the Strategic Partnerships Lead at Juice. Veronica, it's always a pleasure. How are things going with you and Juice?
Well, it's definitely a busy August. Absolutely no slowdown on my side. So for anyone who's not familiar with Juice, we are a UK-based SME lender. And we've actually just launched Juice Now, which is a smaller credit facility from 5 to 150K for businesses who really want that turnover in and approval in 24 hours, quick decision, and all terms explained before you sign. And then me personally, I am gearing up to speak at Fintech Meetup in October in Lisbon. So I will also be organizing community events for Fintech founders and VCs coming from Southern Europe and here in the Lisbon area.
Love it. Busy as always.
Never stops.
No, that's good. That's the way we like it. Lovely to see you, Veronica, as always. And last but not least, we have a welcome to the show for Tom Mylrea-Lowndes, General Counsel and Head of Corporate and Regulatory Affairs at Teya. Tom, welcome to the show. It's lovely to have you. I know you also have some exciting news that we'll get into shortly, but if you wouldn't mind, first just maybe giving us a little bit of an introduction both to yourself and Teya.
Sure. Long-time listener, delighted to join. So Teya, our aim is to be the primary financial services provider for local independent businesses. We started with a focus on payments, where we've built sort of a best-in-class proposition. And now we include the business account as well as the credit proposition. We had Alessandra, our Chief Product Officer, I believe, on one of our earlier episodes. So she went into a bit more detail of the summer release. But to give you a bit of an idea of size, we're present in 9 markets across the UK and Europe, serve 75,000 members at this time. Yeah, I joined early on in the journey. I built the legal team, the compliance team, the privacy team, policy team, later the risk team. And as you said, I currently serve as the General Counsel and Head of Corporate and Regulatory Affairs. So really my role is to ensure we abide by, obviously, all of the regulatory obligations, but also then the commitments we make to our members. And I guess my passion is also advocating for policy changes on that front.
Love that, Tom. That's awesome. Well, it's we're delighted to have you. And really keen to get into your stories and the wider stories as well. So I suppose without further ado, let's do just that. Now, this first story comes from FinExtra with a headline: Revolut awarded full-fat European banking license. So Revolut has secured a full banking license in France, approved by French regulators and the ECB. It comes just a year after European supervisors reportedly restricted new product launches, while Revolut strengthened its governance, risk, and compliance controls. Revolut now has around 30 million customers across Western Europe and is investing more than 1 billion euros in the region, including a new Paris HQ. The French bank will serve France first, then expand into Germany, Ireland, Italy, Portugal, and Spain, alongside Revolut's Lithuanian bank. Now, Veronica, I always feel like you're sort of our resident expert maybe on all things Revolut, so I'm certainly keen to get your reaction to this one.
Yeah, I don't know how I earned myself the title of a Revolut correspondent, but I think maybe a bit of an unhealthy obsession with them. I think one of the main reasons that they really chose France is, other than the very sophisticated financial services market that France has historically had, I mean, that really points to a lot of where their roadmap is going to go with asset management, mortgages, and that expansion into Southern Europe actually also further points to that. But France is, I think, just a bigger signal. It's not just the location, because Revolut is essentially rocking up to the ECB and saying, we've parked $1.2 billion of investment here. We have 7 million customers here. We've got this HQ here. And so that's not really an application for a banking license. That's a full statement of intent for where their roadmap is going to go. And a nod to, again, how sophisticated that French regulatory system really is.
Yeah, I couldn't agree more. And Phoebe, I think one thing that's sort of apparent, sounds weird even just to say it out loud, but I don't think you could ever accuse Revolut of a lack of ambition, shall we say.
No, I think there's what mere mortals would class as impossible, and it's just their casual next 3 to 6 month roadmap. Their growth has been astronomical, and getting one bank license was hard enough from my perspective with Griffin, but they're pushing. And if you look at their numbers, that growth is truly insane. And I think there's this narrative around them being a challenger. They're not a challenger. They're also not really an incumbent, right? They are the new wave of banking to a mass market. It's the tech and user experience that people want. And I think every challenger bank would, those are the numbers that you're going after, but they've actually achieved it across a fairly complex regulatory environment. It's hugely impressive.
Yeah, I'm with you 100%. It almost feels like we've lost all sense of perspective as it comes to the sort of growth and everything that surrounds Revolut. To your point, they're absolutely not a challenger. I think, they're saying around about $115 billion valuation off the back of their most recent secondary share sale, which puts it, above the market cap of what we would consider to be some of the largest global banks in the world. But Tom, the point that Phoebe made, and I think we called it out in the body of the story as well, is it doesn't seem all that long ago that there were, this sort of narrative centered around maybe the compliance and the regulatory rigor, and maybe that being a bit of a blocker to some of the momentum that we're now seeing from Revolut. So that in itself is kind of an interesting change.
It is, but we know that once you become a banking group in the UK, the PRA is likely to impose some sort of group oversight. So, following their exit from the mobilization phase, we know that they have now become more accustomed to meeting those obligations. And given the PRA is one of the best regarded regulators globally, that level of scrutiny they'll be under the ECB and the French Central Bank will not be new to them in some regards, right? And so I think all of the work they've done on that front to be taken seriously in the UK has set them up for this level of success. And it's clear, as Veronica touched on, that France has become their biggest market in Europe in terms of retail banking. And so you can understand why the central bank there has kind of encouraged this move towards more local regulation, and that combined with the commitments they've made has meant that the political support, I think, has led to I believe 15 months it's taken them to get this. So everything kind of aligned for them in terms of what they've demonstrated in their capacity to meet these obligations, the political support, and then I think the encouragement from the local regulator. So it's certainly impressive, but it's not a surprise.
It's an interesting point, Tom. Is it fair to say that sort of getting to the point where they've been regulated and they've got a banking license in the UK, is that seen, in other markets as a bit of a gold standard, and so it opens more doors?
100%. And it's no coincidence that they obviously have ambitions to list, likely in the US, and that they will be looking to diversify from their Lithuanian kind of regulatory hub of passporting in Europe and have the similar gold standard from the French regulator. So the combination of the PRA, now the French central bank, in addition to obviously the ECB that was already there through the Lithuanian, I think it just adds to that reputation that they're building. That I think we're here to be taken seriously, and that will set them up for success, I believe.
Yeah, I mean the momentum is really so impressive, and it doesn't seem as though there are any signs of that abating or slowing down at any point. Veronica, one thing that I am keen to sort of pick up on. So Phoebe made the point that they're not a challenger, and I think that's exactly right. But also then that they're not necessarily an incumbent. They're not a traditional bank, and I think the nuance there is interesting in and of itself.
Yeah, absolutely. I think what Revolut are really going to show, beyond just the financial services that they're actually offering, is that a neobank is not, a digital customer service behind a chatbot anymore. It's really a full ecosystem of deeply sophisticated financial products. But even with everything that they have done to build a broader business ecosystem, it's about truly borderless banking, through the Revolut platform, everything from their airline perks to actually even being able to draw out cash anywhere or print a Revolut card. That's a huge boon for the everyday customer who might be at least financially savvy enough to game that system. For business travelers, I think many times on this show, we've asked ourselves if Revolut is trying to out Amex, and they're trying to out Amex and out JP Morgan, because it's more than just products and features. It's really moving towards what borderless banking actually looks like.
And I suppose sort of building out beyond what we would traditionally have thought of as financial services and actually really starting to put a dent in some other sectors. So they're not just doing the Amex, we'll give you some points and then you can go and use them in the traditional airline lounges. Phoebe, now they've announced that they're going to open their own airport lounges. And that in itself, I suppose, comes back to the earlier point about the scale of their ambition. This is a major play.
It is. And I think when you think about the various premium banking and Amex experiences you get, most airport lounges are actually quite bad. A lot of the perks you access aren't that good. On the face of it, you're reading it and you're like, great, I've got access to all of these things. And then you walk into a lounge, which is kind of the size of a living room with 50 other people in it, and it's a fight to the death to get to the alcoholic beverages. And I think them actually pushing out into the physical experiences with Revolut is just a natural continuation of them taking bets on things and executing them well. And then people get stickier and stickier because you can just have a better experience. And it's very cool that they're able to do it. With that valuation, of course they are, but it is a real step change from your very nascent rewards programs that a lot of legacy banks still roll out.
It almost feels like the sort of Steve Jobs kind of if you want to kind of give good software experiences, you kind of also have to own the hardware. It almost feels like they're trying to own the customer experience end to end, but almost to a sort of unreal level. Tom, I think one of the things that we talked about in the story summary at the top was about this France feels like. And of course, they're taking it very seriously in the investment and everything, but it's very much a first step. And then they're looking at other European markets. I mean, the phrase world domination starts to come to mind. Is that fair?
Yes and no. I think, of course, in terms of their size, their valuation, it's semi-unparalleled in the current landscape. But I would go back on the competition front to the size of the opportunity, right? And I think if we think about the vast majority of volumes across payments, banking, and credit, it still largely remains with the incumbents. And that's even more true in the SMB space, where, for example, Revolut have only made less of an inroad than they have maybe in the retail side. Obviously within their ambitions, and at the same time, I would just think that when we think about markets like the UK, where it's probably most competitive, it still remains in the volumes with the incumbents, and that's probably even more pronounced across Europe and the European markets we see. So for me, I think we're kind of at an inflection point, particularly in the SMB space, as we maybe were in the consumer space in the early 2010s. And I think we're only beginning to see customers switching their accounts. So yes, their scale is impressive, and at the same time, I think there is a lot more that can be done in the space, and there's a lot more room for competition that will follow.
It's a really interesting point. And so, Veronica, I started with you on this one. I'm going to give you final word, but I guess what Tom's saying is, they've done a lot, an enormous amount in a short space of time, but actually there's still a lot to do, and so a lot more sort of potential, a lot more white space for them to move into.
Yeah, absolutely. I actually will agree with Tom that it is really an inflection point for them. And I think because they are quite early, maybe imagine 5-10 years from now, people who are doing asset management or doing their mortgages with Revolut will just be seen as the early adopters. And I wonder to what extent it's a bit of a branding thing, because before Revolut was a licensed bank in the UK, you could easily say, well, I'm not going to park my savings there because there's no real guarantee, right? You could say the same thing about Chime in the US, that you wanted to have that brick and mortar regulated bank protecting your savings. So I wonder now that it is a regulated bank in many jurisdictions, I wonder now if it's just a bit of a branding position, because I think we're moving past that point as an industry where it's about what fancy bank name you have written on your credit card when you lay that down on the table at a fancy restaurant, right? It's it's not about the color of your Amex anymore. I think the branding piece, the real adoption, I think it's a first wave of something a bit bigger, and they've got a lot ahead of them for sure.
Yeah, I'm with you 100%. I think we're going to be talking about them a lot more on this show. Not that we haven't talked about them a lot over the last 10 years. But I think we're sort of almost moving into the territory of like the weekly kind of like Revolut does a thing segment, which is exciting. All right, our next story is from Fintech Finance with a headline: Countingup partners with Griffin to launch integrated business bank accounts for UK SMEs. So Countingup has partnered with Griffin to launch full business bank accounts for UK SMEs, combining banking, accounting, and tax tools in one app. The move comes as small business owners face more admin pressure from making tax digital and increasingly complex reporting requirements. Countingup says that 48% of small business owners don't find filing and paying taxes easy, while 78% are interested in a service that brings banking, accounting, and tax together. By moving from e-money accounts to full bank accounts through Griffin, Countingup can now offer FSCS protection, open banking compatibility, and features like an interest-paying tax pot. Phoebe, I mean, obviously it makes sense to come to you first on this one. Look, firstly, congrats on the partnership and the launch. Sounds really, really exciting. What can you tell our listeners about it?
So I mentioned this earlier, but Griffin is built on the premise of contextual financial products. Give people what they want, where they want it, and when they need it. And we see it across the board with various propositions where some people want savings attached to an app where they pay utilities and they have a switching service. But if that's what they want it, that's where they want it, give it to them there. And Countingup is doggedly focused on getting rid of the excess admin that small businesses are expected to keep up with. And we're talking about the smaller end, your sole traders, your 1 to 2 man shops that don't have a finance department, they don't have a large accountancy firm. And it felt very natural to team up with Countingup on this because it's something that's genuinely useful with relatively little uplift for the app. You get that full banking journey, you have your accountancy piece, the bookkeeping, the tax, and purely from my perspective, HMRC is a minefield. I don't know if anyone's ever used Government Gateway, but I feel like I need another degree just to access it. Like, give me the...
Just for, because it is just a podcast, but for our listeners, everybody on the panel is furiously nodding their heads at this. So I think we've all had the same very painful experience.
Hey, it's glamorous, the lives we lead. But the really exciting thing about this product is that it's genuinely making the kind of smaller end of the market's lives easier. And it's providing a product that's optimized for them because as someone who in a previous role quoted, the SMEs are the backbone of the UK's economy, we did a big push on products and developing products for them across the 2010s. But there was a gradual push into the larger end of it because your margins are bigger. But I don't think we should be incentivizing sole traders and small business owners to buy software that doesn't work for them. It's hugely costly and they don't have the people to man it. And that's why we love the Countingup product so much.
Something that someone once said to me, and I think it's important context, I suppose, to sort of bring some of the complexity to life around serving the needs of SMEs is businesses are so unique. Each individual business is so unique. And actually, in a financial services context, but then also more broadly, there are about as many problems to solve as there are individual SMEs. And I think that's why it's such a complex segment to serve and sort of address. But the thing that, Phoebe, that you said that really resonated and that I think is absolutely spot on is that the one common thread is entrepreneurs and small business owners, primarily they want to spend their time, focusing on the thing that their business does, the thing that they're passionate about, and not swamped in admin and sort of back office and sort of spending all of their time there, which we know is a massive problem. And so I suppose thinking about banking in a silo, thinking about, tax in a silo and all of these things just adds to that administrative load, that administrative burden. And I suppose that's where there is so much upside here, is that sort of bringing those things together and helping to streamline a lot of that.
Yeah, because you can get drowned in the various platforms you use, the amount of reporting you have to do, and you still have to keep your business, which is, in a lot of cases, it's entrepreneurs at the center of their life. I don't think you have many people that come onto this podcast who've started incredible companies who are like, yeah, the best way I spent my founding years was working out our tax calculations.
Mm-hmm.
And it's being able to actually right-size products, like banking products in this sense, because you get a lot of marketplaces and banking apps, but you very rarely get the tools.
Yeah. No, I couldn't agree more. Tom, keen to bring you in. What was your reaction to this story?
Yeah, I think a fantastic announcement. And it really, for me, highlighted whether it's tax, whether it's accounting, whether it's onboarding, that a big part of the problem is data, fragmentation. And so I think, where we're seeing new ways of tackling this, giving more access to financial services for small businesses. And I really echo a couple of points Phoebe made. I definitely, the sentiment around the high street businesses being the backbone of our sort of economy, I think that really resonates with Teya's mission. And so anything I think that's going to make tax easier for these businesses who actually need to be focused on what they do best is going to be a great outcome for those businesses that are able to adopt those services.
Yeah, spot on. Veronica, what stood out for you?
Yeah, I mean, for me, as someone who's cried a lot doing my own taxes.
And in different markets, right? I mean, you've lived everywhere.
Yeah, and in different languages.
Yeah, that's a good point.
Yeah, it's not fun. Like, there have definitely been tears. So actually what always struck me was that sometimes banking and accounting actually seem to live in very different worlds in terms of the interoperability between products, but even the relationships that providers have with each other. And that's, I think, in this case, that's why it felt really significant to me. And I'm like, I should really check in on if this is available in more jurisdictions, because I think it would save quite a lot of people a lot of tears, actually.
Tom, it's a really interesting point, right? Because, harnessed or delivered in the right way, something like making tax digital could offer some upside for businesses, right? It could streamline processes and all of that stuff and everything that we're talking about. Delivered badly, I suppose really what it does is it shifts the burden onto businesses, and you don't really get the wraparound support that you need. So how do you strike that balance? How do you do this in a way that you're realizing that upside without just pushing more administrative burden onto some of those businesses?
Well, look, I think there's two things here, right? One is there's a lot of things that private companies like this example can do to help make it easier. But I think there's also a huge burden that the government needs to sort of lean into and provide this support. And that's why I mentioned earlier the sort of data fragmentation point, because if you think about initiatives such as open finance or smart data, we really need to be able to make it much easier and reduce the burden on those small businesses for them to be able to comply. And not just comply, but for them to be able to then access the services that are going to help them sort of scale their businesses. So I think we want to continue to see new services being provided by businesses in the market, but we're also going to need to see a bit more from, I think, government support coming in. And, we recently hosted an event at Teya where we hosted Emma Jones, the Small Business Commissioner, with a lot of our fintech peers, and we brought in a lot of our members to come in and speak about their challenges. And the consensus across the room was that businesses face such a high level of friction and they lose a lot of time. If they're waking up in the morning, the first thing they're thinking is, have my settlements come in? How am I paying for the next amount of stock that I need? Have I paid my employees? They're not thinking, have I managed to, go through all my tax and submit this? So anything that eases that burden is important. But if we think about, the challenges they still face, then, for example, it's crazy to me that the data that's held on something like Companies House cannot be used to verify the identity of a business at onboarding, right? So how have we not found a way of joining up the sort of services and the data pipes that are held by HMRC, Companies House, in a way that is easy to use and reduces the burden on small businesses? This has been solved in other jurisdictions with a simple concept like a tax ID. So there's a lot that I'm seeing in terms of innovation and new services, which is great. But unless there's a bit of standardization that makes it much, much easier and reduces the burden, and that can't all come from the private sector. So, maybe this is my soapbox that I am happy to stand on, but I would call out for a little bit more in terms of support for that standardization that needs to come in the form of government and policymakers that are going to make this much easier.
I think that's absolutely right. And the Companies House example is such a good one for, potential quick wins that actually could have, really material upside. I think the other point that you made that really resonates with me is bring businesses into the conversations, design it with them, because, you'll take them on the journey. There's no point just kind of going, ta-da, here's a new system, kind of off you go. But build it based on their needs and their requirements. I should say for our listeners outside of the UK, making tax digital is the government's push to move tax administration online. It requires businesses and individuals in scope to keep digital records and use compatible software to send tax information to HMRC, that's Her Majesty's Revenue and Customs. Phoebe, one thing that I want to make sure that we touch on before the end of this story is the point around moving off the e-money license, becoming fully licensed, having that FSCS. How important is that to solving for some of the problems that we've discussed?
Don't get me wrong, big fan of any account that's backed by an e-money license. But I think if you are a business like Countingup, and Countingup is expanding this product beyond their own reach and they're launching with Money Supermarket, it's really important to address the psychological factors around opening an account on a platform like Countingup or through Money Supermarket, where you can guarantee the FSCS protection, you can add that extra layer of comfort. And the other big part of it is at Griffin, we're great believers in sharing the value back, and interest is a big part of that. It's a big part of our business model. And I think having that capability on whether it's the savings pots or even you can look at what Tide did with Clearbank, and you had interest being earned on your current account funds, which in the SME market is incredibly rare. The average SME savings account rate is probably half of what you can get as a consumer. Being able to bed that into the product is really important alongside the deposit guarantee. And it's very easy for us to offer our customers this real account to then push out into the wider market. And it's a big part of our way of operating. We don't actually offer a virtual IBAN structure. Every IBAN is a boots and braces bank account because we feel it's a safer way of distributing our accounts and that functionality into both the consumer and SME markets.
I love it. I think, just to close on this one as well, I think when you look at the broader sort of economic context, certainly in the UK, and I think businesses getting squeezed in almost every direction when you look at things like business rates, when you look at things like, the increase in employers' national insurance, when you look at things like the rising minimum wage, the national living wage, etc. I think anything at all that helps make businesses' lives easier, I think is a good news story. So, huge congratulations on what I think is an awesome partnership, and again, one that we'll definitely be keeping an eye on moving forward. On that note, we're going to take a quick pause here, and we shall be back with you very shortly. Please don't go anywhere.
This episode is brought to you by Facebook. So you were scrolling on Marketplace, and there it was, the bike you'd been searching for. You sent a message, and it turned out the seller was super chatty, kind of funny, and an avid cyclist. The next thing you know, you're in a cycling crew. Well, a community cycling group. The thing about Facebook, you might find more than what you're looking for. From a browse to a bike ride, this summer find more on Facebook.
Late night bites with friends? Already hard to beat. That first too hot bite of fries you couldn't wait for, followed by ice cold Pepsi. Now that hits different. Suddenly, the energy kicks back in, the night goes longer, and the laughs don't stop. Because Pepsi brings out more flavor, more fun, and more of the moment. Food deserves Pepsi. Grab a Pepsi Zero Sugar today.
Now, before we get back to the news, we wanted to tell you about our next After Dark event, which is now just over 5 weeks away. Fintech Insider hosts David Breer and Kate Moody, hang on, where was my invite, guys? Will be joined live on stage by special guests to record this very podcast and break down the biggest news stories of the week. In all seriousness, After Darks are always a heck of a lot of fun, and I will definitely be at this one to hang out. It's taking place in London on Thursday, 17th of September, and tickets are available now at 11fs.com/afterdark. There's also a link in the show notes below. Now back to the news, and our final main story this week comes from Fintech Global, with a headline, 5 firms join FCA Scale-Up Support Unit. The UK's regulator, the Financial Conduct Authority, has named the first 5 solo-regulated firms joining its Scale-Up unit. They are ClearScore, Modular, Urban Jungle, Zilch, and the wonderful Teya. The programme gives fast-growing firms a dedicated regulatory contact to help with areas including new products, regulatory processes, and policy changes as they scale. According to the article, this reflects a broader push by the FCA to support firms throughout their growth journey, from pre-authorization and early growth through to becoming large, established businesses. The FCA say their recent work with high-growth firms has highlighted that governance, risk management, and controls need to evolve alongside the business, and that firms which invest in them early are better placed to scale sustainably. Tom, we mentioned that Teya is one of the first 5 firms in this new cohort. So obviously, I think it makes sense to start with you. First of all, I'd love to maybe just get the Teya context around maybe why you wanted to be part of this scale-up unit.
Yeah, sure. So, look, I think overall it just highlights the importance for me of regulation as a driver for innovation. If I think back to when I first got involved in advising fintechs back in the 2010s, it was kind of around 2016 that the FCA itself launched the first sandbox, and that really was something that clearly had great success, both in catapulting kind of London as a sort of center of fintech globally, but also the concept of that sandbox, right? It helped early stage businesses, and it's now been copied in, I believe, over 90 jurisdictions kind of around the world. So that just shows you the success of that. But I think if we think about where we are now, particularly from a sort of London perspective, the market's much more mature, and yet we don't necessarily see all of those early stage fintechs progressing into kind of big global players. So I think this is recognition of two things: the maturity of the market in London, and also the need to combine kind of that product-led innovation with the regulatory support. And if we can continue to do that, then regulation can be the driver for growth, as I say, rather than the thing that holds it back. When I think about Teya, we take our regulatory obligations very, very seriously, and we're a very product-driven company. So we've got hundreds of engineers. We're very ambitious in our product roadmap, and we see this engagement as an accelerator for that. So the ability, specifically, for example, with the AI agent we have in our app, it's providing insights today. I think as we move to sort of the agentic space, it's really important that we're able to ensure that customers are totally clear and they understand what this product does and are in full control. It's also kind of at the cutting edge of the sort of innovative space when we think about product. And I want to make sure that we take customers on that journey. So as our product is very high usage, we've got lots and lots of touch points throughout the day. That's real-time feedback, and we're able to use that and help us in looking at our roadmap. I'd like to think that this opportunity will enable us to help inform the regulator as well, and so we're able to continue to develop our products and do that in lockstep with the FCA. So a fantastic story that we're very, very proud of, and we're excited to begin the engagement.
I love the point that you made about, because obviously the FCA's innovation sandbox, I think, to your point, was seen as such a gold standard globally. And of course, there's so many countries, as you say, that have modeled their own innovation sandboxes around that. But it's never just a one and done, right? I think as the market matures, as you say, as individual companies mature, the regulatory context shifts, some of the regulatory challenges that you need to, that you're facing into, that you're dealing with, shift as well, right?
Absolutely. And I think the regulatory challenges are maybe a measure of your ambition, right? And we have an ambition to become the primary, financial services provider. And so we're going to be required to continue to develop and ship new products and features at quite a high speed. So if we're going to do that, then we need to go beyond the kind of challenges that we had when we were, starting out. And that's where this level of support is going to be instrumental.
Tom, it's a slightly loaded question, but I suppose there has been a narrative that the FCA was seen as such an early leader when it came to fostering digital innovation and fintech, and then maybe that it's perhaps been overtaken over the previous years by some other markets. Do you see this, or at least in part, as sort of a statement of intent by the FCA in terms of their own ambitions to maybe retake that mantle, sort of moving forward?
Look, 100%. I think nothing stays stagnant and continues to be as good as it ever was. And clearly there was a bit of a brain drain that came out of that fantastic period of the FCA. Obviously, a lot of the talent was then moved on to other challenges. I think this is a statement by Colin and the rest of the team to say, we're going to get back to what made us that kind of world-leading innovative regulator. And I'm here for it, right? So I do believe it's a statement of intent. And I think this is only the beginning, right? This is just the announcement. We haven't even had our first meeting. So I think when we get into September onwards and we're able to sit down and have these conversations, then I'm really hopeful that we're going to see that same level of quality, that same level of forward thinking. And I'm really confident that from what I'm hearing, that's the intention. And if it does indeed provide that platform, then I see no reason why the FCA can't get back to that place.
Love it. Love it. I share that optimism. Veronica, obviously keen to bring you in on this one as well, given your your sort of previous role at Innovate Finance. What's your sort of reaction, your interpretation to this one?
Yeah, I mean, I think it's really important to have that ecosystem involvement. And it's actually really underrated how important it is to have that support, because the conversation about UK fintech used to be dominated about authorization for so long, kind of getting in, getting licensed and so forth. And we've just moved so far beyond that as an industry. If anything, I think it just gets more complex as you scale, because you're talking about adding jurisdictions, adding customer segments, you're adding complexity as you scale. And if you have a dedicated contact who can actually really support with that and understand actually what we were saying in the SME segment, the unique particularities of your own business, because every fintech is going to be a little bit different in and of itself. Having that dedicated contact actually can go so much further than I think a lot of startups can estimate.
And speaking of fintechs, I mean, we've got such a great sort of range of perspectives to sort of talk to this one. Phoebe, obviously, Griffin has been enormously successful, experienced quite rapid growth. So again, I mean, I imagine that you can see value in this type of initiative.
Oh, hugely. And I think that the FCA is a principles-based regulator. It has the flexibility, and the PRA are very similar as well. They have the flexibility to adapt as you grow. With us, as we move and we grow, we have more underlying customers, our capital treatment changes. And I think that having that flexibility in our financial regulators is really, really important. But we've kind of come into the teenage years of a lot of the fintech startups of the 2010s, right? They were the startups, they were part of the sandbox, They were the early authorizations. They continue to grow. Like, Modular Story is also incredible. And it's this new business, which was a new business, which is now becoming the norm. And the regulators are kind of adapting to their emerging class. Because they've built the product and they've run the product for enough time now, but they're not going to behave like the predecessors that are sat in those regulators' portfolios.
Yeah, spot on. Tom, one of the things that you mentioned that I'm conscious I sort of breezed past. I think I breezed past it because we've almost got through our main stories on Fintech Insider, probably for the first time in as long as I can remember, without talking about AI. But I am going to bring it back because, of course, in a regulatory context, that's where it starts to become really interesting. So I'm keen to, I suppose, get your perspectives, because you can't talk about the future of financial services without talking about AI. And of course, as it always is within financial services, regulation is going to be such a core determinant in terms of where that gets to over the next few years.
Yeah, 100%. And I think we're at a stage where this is true of all product developments, but the more that there can be a feedback loop, the more that the way that regulation develops can support that and keep customers safe. And I think nowhere is this more true than AI, where it's kind of always at the cutting edge of that product development, but it's also the place where we're in a kind of new space for the regulators. And as a result, there's two ways of doing this, right? The regulators can come in and kind of regulate something quite early, potentially not understanding it fully, and that can then hold back innovation and hold back growth, which ultimately will harm customers because it doesn't then bring more and more services and competition to the market. So I think that's the right example, and it's clearly a key area for regulators at the moment, whereby with this feedback loop, we'll be able to learn together, learn as we're developing products, and making sure that as we're developing products, we're keeping the customer front and center, so that they're kept in mind in terms of how they're in control of it, and we can then help the regulator understand how we're seeing it and how consumers and businesses may be seeing it, so that they can then regulate it safely, but without holding back innovation.
Yeah, spot on. I think you nailed it. Veronica, final point to you. I think we're over time on this one, but I'm curious. I think we mentioned on the Revolut story about them potentially listing in the US. I think we've heard similar noises around Monzo and lots of other, what would have been considered the sort of darlings of UK fintech. Do you think this type of initiative from the FCA over a slightly longer time horizon, we might start to see some of those more successful fintechs actually listing in the UK?
Honestly, over a longer period, yes, I think we can start to see it. I'm not necessarily very confident that Revolut and their cohorts who are looking at a listing in the next year will look at the UK. And I think that's a little bit more complex than, just the regulation piece. It really has a lot to do with liquidity and capital markets as well. So in short, I would say we're getting there. It is going to be a little bit of a longer road because I think it's still not quite good enough for this current cohort of unicorns. And so maybe the focus should be is how can we, let's say, breed and nurture that next generation of unicorns, future-proof it for sure.
Love it. All right. Well, on that note, we're just going to take a very quick pause and we will be back with you very shortly.
This episode is brought to you by Facebook. So you were scrolling on Marketplace, and there it was, the bike you'd been searching for. You sent a message, and it turned out the seller was super chatty, kind of funny, and an avid cyclist. The next thing you know, you're in a cycling crew. Well, a community cycling group. The thing about Facebook, you might find more than what you're looking for. From a browse to a bike ride, this summer find more on Facebook.
Okay, now for a quick look at stories we don't have time to cover in full. This one comes from Payments with a headline, Startup Bank Erebor eyes valuation of $8 billion. The US startup-focused bank Erebor is reportedly in talks to raise $1.5 billion at an $8 billion pre-money valuation just months after receiving its banking charter. Founded in the wake of Silicon Valley Bank's collapse, Erebor is targeting startups with capital-intensive sectors including defense, energy, and AI. The bank reportedly had $4.6 billion in deposits by the end of July and has already passed $100 million in annualized recurring revenue. Erebor says its edge is understanding assets and businesses that traditional banks may struggle to assess, including private securities, crypto-backed lending, and specialized industrial equipment. Obviously, what's really interesting about this is they're plugging what appears to be a very clear gap, obviously following the collapse of Silicon Valley Bank in the US. Some of those numbers point to some really, really strong momentum. That $8 billion pre-money valuation is really quite impressive. Obviously receiving its banking charter and, of course, $4.6 billion already in deposits points to a clear need. And of course, a strong direction that aligns with where we're seeing the lion's share of funding when it comes to financial services, specifically AI and digital assets. So, some good momentum, a clear need, and, you'd imagine some learnings from what we saw in terms of the fate of Silicon Valley Bank. So really interesting one, and of course, one that we will continue to keep our eyes on. Okay, and now onto our and finally story, a story that we really wish wasn't true. This one comes from Futurism with a headline, AI startup offers job interviews in exchange for tattoos. Y Combinator-backed AI startup Lemon Lime held a recruitment event where attendees were offered an instant job interview if they got a tattoo at the event. 7 people reportedly took them up on the offer, with the founder saying the idea was to find people who were, quote, just as crazy as we are. The stunt quickly attracted criticism, I mean, who could have seen that coming, over the power dynamic of linking something permanent like a tattoo to the prospect of employment. The founder later apologized, acknowledged he had misjudged that pressure, and offered to cover tattoo removal costs for anyone who regretted taking part. It's kind of gross, this one. Veronica, I'll come to you first. What's your reaction?
I mean, if you really want my hot take on it, and this is just one of those days, but this is exactly the kind of thing I would expect from that sort of Y Combinator bro culture that has come out.
Oh.
And like, and I say this as someone who I have questionable tattoos, like, because I had nothing better to do that day. But it's an idea that I think is very funny in the abstract. But we're way past this era of like drinking the company Kool-Aid, especially now in a post-AI world where there's a real fear, if you look at polls and surveys, that workers have of being replaced by AI. You know, it's no longer a cute, edgy joke, but it's like, well, why would I prioritize a company that I don't even have a job interview yet? Why would I do something weird to give up my bodily autonomy for someone who would, you know, put their employees out on the street the next day? You know, it's just, I want to give them the benefit of the doubt that like they wanted to be kind of cute with it, but just so did not land.
No, it really didn't. Yeah, I don't like it. Phoebe, what do you think?
I mean, our CEO has to bully me into company branded clothing. I'm not a big.
It certainly takes swag to a whole new level, doesn't it?
This isn't very eloquent, but it's really gross. Like, it is so gross. It sounds like someone got too excited watching the early episodes of Yellowstone where they're branding the farmhands, and it's just, it's not really a culture that I would endorse or want to be part of in any way.
I'm with you. I mean, it's that point that Veronica made about that sort of like that bro culture, but it's like, yeah, I know you're in the bubble, but how can you get it this wrong? Tom, what do you think?
Yeah, I mean, when I first heard the story, I assumed it was, it must have been those sort of temporary 3-month tattoos. And I think clearly there's been a push. They knew what they were doing. Come on. They're going hard into the, you know, no news is bad news lane. And I think they invited this level of noise. But yeah, one to smile about unless you have gone ahead and got one of their tattoos. And particularly if you haven't then had a successful job interview, I think that would be a hard one to swallow.
Oh, such a hard one to swallow. Can you imagine? Like, an unsuccessful job interview is hard enough to deal with without a permanent reminder on your body. I mean, come on. Veronica, is there any sort of redemption in the fact that the founder did relatively quickly admit the mistake, you know, offer to cover the cost of removal? I can't even believe I'm saying this, but I don't know, humor me.
I mean, actually, you know, Tom, you made me realize like maybe they were going for rage bait, like, which is a whole other meta level of strategy, you know, putting us in the shitification of everything on the internet now. So I don't know what to think anymore.
You think, yeah, I mean, look, it is, I mean, it is, Tom, to your point, it's the next level up from no news is bad news or whatever that saying is.
I mean, here we are, and we've committed several minutes of this podcast to the story. So if that was their intention, then on some level, they've succeeded.
Do you know what? On that note, I think let's not give it any more airtime, shall we? Look, that does wrap up today's show. Thank you so much to today's guests. Guys, where can people find out a little bit more about you and your companies? Tom, let's start with you, shall we?
Yeah, Teya.com. We've got lots of information about our summer releases, and you can find me on LinkedIn, Tom Mylrea-Lowndes.
Super, thanks, Tom. How about you, Veronica?
You can find me on LinkedIn at Veronica Maria Glab or on Substack at Fintech at the End of the World.
Amazing. Phoebe?
All things Griffin, griffin.com. We've also just rebranded the website and it's very pretty. So take a look. There's also lots of exciting customer stories on there, and they're about to ramp up. And we also have our own podcast, which was done in pure admiration of 11FS. But and then I am reluctantly on LinkedIn at Phoebe Wallis.
Awesome. Thank you, Phoebe. As for me, you can find me on LinkedIn. And as ever, if you want to find out a little bit more about what we do at 11FS, then please visit 11fs.com. As I say, that wraps up today's episode. Thank you so much for listening to today's show. If you like what you heard, please make sure to follow us on your favorite podcast platform of choice. And if you really like what you heard, why not share the podcast with a colleague or friend? As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider or email podcasts@11fs.com. Thank you very much again, and goodbye.